Welcome back. Here with us on Trading Hour. Well, Tata Steel will be reporting numbers today. Nigel is here with the key expectations. Nigel, run us through. Is it likely to be a decent quarter?
Well, for Tata Steel on a year-on-year basis, the numbers actually will be weak. So on the top line, we're working with a degrowth of close to around 9%. On an EBITDA front, it'll be down by more than 60%, and the profit number as well will get trounced. Let's explain a few factors out here. First, focusing on the top line, we already have the operational numbers with us, which is the dispatches number. India operations have done quite well, 18% growth on a year-on-year basis, so that gets a tick mark. Europe, though, as warned by them earlier, that they're going to be undertaking a shutdown, a part shutdown for the past quarter. So that's why those volumes are down by close to around 8%. And Thailand on a very small base, well, that as well is down in double digits. Now, the factors at play, the realizations, they could be more or less flattish, which will be good news because the auto contracts have got revised upwards. So that will help the realizations because otherwise we know steel prices actually have been lower in quarter one if you compare it with quarter four. So that's what saves them on the top line. Coking coal costs, well, the management had warned us that the prices will move up. Coking coal costs have come down effectively, but they'll be sitting on some high cost inventory. And that's why the rough estimate is that coking coal costs will effectively be up by close to $15 to around $20 per ton. And the benefit of lower coking coal cost will flow in the coming quarters. You'll be wondering why such a sharp contraction on the PAT front. That's because of the British Steel pension. So that's a non-cash item that will hit it. It will come in as an exceptional item. The key numbers to track for Tata Steel, one is the Tata Steel India operations. Out there, we are working with an EBITDA per ton of around 13,600 rupees. And for Europe, well, it'll continue to report a loss of close to $90 per ton. Any kind of commentary with regard to debt reduction, capex plans, as well as how are they negotiating with the UK government will be things to track. Back to you.
Thank you for that. SRF will also be